Good afternoon, everybody. So pleasure to be back here. It's been almost exactly a year. It's interesting because there's somebody here that I live in Florence, Italy, in the hills outside of Florence. I'm a resident of Luxembourg as part of the PayPal Bank in Luxembourg. I commute. And then I'm across our business units in Europe and Middle East Africa, where I work, and Silicon Valley. There's a gentleman, actually, who was inspired last year when I had mentioned this last year in this conference. He has up sticks and actually moved to Florence. So I hope what I'm going to talk about around payments is as inspiring as apparently my lifestyle as well. So just to kick off, what I wanted to spend a little time today on, I was asked to speak around innovation and security. And really, I want to turn a little bit around innovation on its head as well. What I've found is, people tend to focus on the new shiny object. I've been in payments for nearly 20 years now, here in Europe, in America as well. And, it's the next shiny toy, tokenization, it's mobile, it's what have you. And, innovation is also about doing what we already do today, but doing that better as well. And in PayPal, those are some of the things that I'm leading up as well, is looking at not just payment services, how we can do those better, but also business services and helping be a business driver as a payment service provider. So let me see if I can work this little set of slides. So I want to speak across four broad themes, though, which really are unique to Europe in payments that really need to be kept in mind. The regulatory shakeup that's going on I've been working here in Europe now about 15 years, is nothing like we've ever seen. It's coming at us hard and fast. And so I want to, make a few remarks around some of those developments, but many of them very positive, some of them proving a bit of a challenge, and I'd like to talk to those. But what we're also seeing, especially at PayPal, we've got 80 million customers here in Europe, 160 million worldwide. We're seeing rapid change in consumer and merchant behaviors, as well as needs. And I'll talk a little bit about specifically within Europe, because if we're going to grow business here, we're on the brink of potentially long-term deflationary environment in the Eurozone. I feel personally, and I hope many of you do as well, we actually have a role to play to help get us out of that environment, to help drive growth and be a business driver, not just a payment provider. And then finally, some of the shiny toys as well, because we're very excited. I'm personally very excited about hosted card emulation and tokenization, because it's really, there was the gentleman from Comios from Belgium, he talked about going from offline to online. Well, this new development is taking us, who are 100% online, and getting us onto offline or onto the high street, and bringing new competition actually into that environment. So I just want to throw out, you've heard a lot around the actual regulatory environment. Personally, though, it's kept my government relations team extremely busy, as well as our business teams as well. The one thing I want to talk about is just, the development on SEPA has been a tremendous success. What I will say is that was where we saw a business opportunity around a regulation. There's now 70 million consumers that can now pay with their bank account on the internet that could not before. In December, just 3 months after the end date, we switched on PayPal, Belgium, Austria, and Italy to be able to add your bank account through the new SEPA formats to pay through your bank. And those countries, those debit cards, actually were not enabled for internet payments, at least very limited in Belgium and not at all in Italy or in Austria. So the day we started ramping up, we did a silent launch. There were thousands of consumers banging in their new SEPA IBAN and BIC and being able to pay through their bank, almost 70 million. So suddenly my revenue was up, my transactions were up, thanks to a regulatory effort. So well done, everybody, for those of you who worked on the SEPA initiative. It wasn't all just a regulatory effort. EU MIF regulation, the only thing I'll say around that is let's get it over with, let's get on with it. It's a 9-digit figure that I pay in interchange every year on behalf of our millions of merchants in Europe. That said, whenever a situation has to be, marketplace has to be regulated, it usually is suboptimal and, to the, detriment usually of innovation. It is what it is, but let's try to move on. PSD 2.0, 2017, and again, you've heard a number of things around that. I think it'll help normalize the situation. You've got a lot of payment providers, TPPs, who are today not regulated, unlike PayPal, who is a fully regulated financial institution based in Luxembourg, which is why I'm a resident for the bank. But I think this will normalize the situation for other payment providers so that that same level of regulation and rigor is actually applied to those providers across the board, so that we have an even playing field. And then the internet security recommendations. Let me just say it's been about 12 months of working closely with our regulators, also in engagement with the European Central Bank, to comply and explain. We're almost there, I think. It's the deadline is August, but for PayPal at least, what we found in this is that there is not one size fits all on security. We do things very different from anybody else, and many individual banks do things differently. I think we had 3 8-hour sessions with the BCL, the central bank, and the CSSF, just to explain what we do. We flew in experts from Silicon Valley, from our Center of Excellence in Israel, showing global best practices, which really allowed then our regulators to learn and to understand that there are going to be different standards. And really my view on that is, why don't we set a quantitative set of these are acceptable levels, and for providers that don't meet those levels, then they need to do something else. They need to put in additional security. As long as individual providers can actually prove that the security solutions they have in place work, and to report on that regularly. Trying to come up with the EMV chip and pin of the internet or mobile is never going to happen. It's not going to happen. There's not one technology that is going to solve for that environment. And so recognizing that, I think we need to have a more flexible environment and to help our regulators to be able to interpret and apply those. So that's where I'm going to leave it, because I've only got 7 to 10 minutes. I found this in Fast Company, a magazine, and really I was just flipping through. And unfortunately, I left the title off this slide because it's a little indelicate. It said, "Sorry, banks, the millennials hate you." That was the name of the article. I mean, it was a little brutal, yeah? Because, again, we're a bank as well. I felt kind of personally taken aback. But, 70% of millennials, those born between 1981 and 2000, sort of the next generation, 70% of them said, "I'd rather go visit the dentist than go visit my bank." I mean, that hurts, yeah, in all sorts of ways. And you can see these seismic shifts. But the expectation is that generation, the majority, do not expect to look to financial institutions for their payment needs. And they expect that the entire environment will be very different. They look to Google, Amazon, Facebook, dare I say it, we're on the list, PayPal, we didn't pay for that study or anything, to actually deliver their financial and payment needs in future. So, I think that's a tall order. We take that personally as well, that we need to up our game, but it also is a message to the financial services. Consumer side, clearly new generation with new expectations. Retailer side, because again, we have both ends of the stick. We've got millions and millions of buyers, as well as millions and millions of sellers within the PayPal ecosystem. And so we've got a finger on the pulse. And we did a study across Europe. Not surprisingly, the transaction fees that a merchant pays, top of mind, most top of mind for the big merchants, less so for small and mid-size. But out of the, say 100 merchants, not even a majority said price was the most important. Security was one of the most important things, as well as a trusted brand. When you combine those two, which is generally trust agent, security, fraud, that sort of works out to the next most important thing. After that, though, and this I find really interesting, especially in the current economic environment, is time until payout. You've got a lot of small, mid-sized businesses who really rely on getting their money as quickly as they can. They're trying to build a business, they're a startup, and that's a real concern. If you look 15 and 14%, a much bigger concern in the small, mid-size. And the ECB did a study on SME lending last year, and the number one concern, outside of just trying to find more customers, which is a pretty standard one, is access to finance, especially for small and mid-sized banks. And that's an area that we're, as financial institutions, as payment providers, we're strangling startups and new business here in Europe.